Fantom's one of the rare cryptocurrencies that's actually running against the market. Bitcoin's in a pullback, Fantom is off. So I'm not going to sit back and analyze this for you. We're going to do this together. Get your trading view chart up. We're going to learn something in this video. And Fantom is currently trading at just under $1. It's trading at 97 cents. Now, take a step back, take a look at this chart. I've got no indicators on there. I've got no moving averages on there. I've got nothing on there other than pure naked price action. That's what we're going to use to start with, and we're going to learn step by step how you can identify this chart and tell whether this chart's bullish, whether it's bearish, whether we're exhausted, whether we're overbought, whether we're oversold. We're going to learn it all in this video. So first and foremost, what I want you to do is go up to the time frame, and I want you to zoom out into the weekly time frame. Each one of these candles now represents 1 week of price action. The reason why we do this is because the higher you zoom out, the less noise that there is. And we're going to take out even more noise now by just going to the top of your trading view chart and clicking line chart. Now, what the line chart does is it goes by the candle close, the close of the day. So what that does is it takes out the extreme highs and the extreme lows of the days represented by the wicks. Now, what we're going to do is simply, and I'm going to make it as simple as possible. We're going to join up the dots on here. So we're on the weekly time frame, we're on the higher time frame, we've got no noise, and we're going to join up these dots. And I'll show you exactly what I mean. How many times has price action respected each point previously? And you can see on this one, this is a standout one. You've hit price actions hit once, come back down twice, 3 times, 4 times, 5 times. That's going to be a strong support level. We're going to rinse and repeat this. Just join up the dots. The more dots that they are, the more points that you can join up, the higher probability that you are of price action respecting it as either support or resistance at a future point in time. So remember, the markets rhyme, they never repeat. So we can look at what's happened previously as far as buy orders, sell orders concerned, as far as where price action has had a reaction before in the past. And that's what we're looking for is if it's had a reaction in the past, we're expecting it to have a reaction in the future. So just joining up the dots again, 1, 2, 3, 4 there. And what you'll notice is the higher you move up, the less points that you're going to have. Less points that you're going to have, the less resistance that you're likely to have going forward. So once we get up past these resistance points, it gets easier and easier as we work our way up to all-time highs. You can see that here. You've had no points, you've had 1 point there, you've had a couple of points here. And as we start going up and up and up, you'll see that there's less and less resistance. Less and less resistance. That means price action will eat away at these levels a lot easier. Right, okay, so we've got our major weekly support and resistance built in. So what we're going to do is go back to the candle chart, and then we're going to zoom back into the daily chart and look for our next thing. So the next thing that we're going to look for is a simple diagonal trend line. We can add that on here. Diagonal trend line, it's going to tell us when we're actually wrong. When we're actually wrong, we're going to come back down, break the diagonal trend, come back down, retest this weekly previous support, will act as resistance, and then a move to the downside. The next thing that we can do is look for confluence. So what we're going to do is add the 61.8 retracement on there. So from the previous swing low to the high, and then we're going to add the 61.8. 61.8 is currently sitting at 60 cents. Has price reacted there before? We've broke through. This was the previous resistance level. We've taken out that high. Price has come back through, broken, come back down. It's tested this 60 cent level as support, previous resistance, and then a move to the upside. You can see our next major resistance level sitting up here at $1.16. So that means that we'd be looking for some form of a retracement before we could get a confirmation of a new swing high, a new higher high. So waiting, we've got the 618 here. The next thing that we can do is add in our stochastic RSI. So just go into indicators, type in stochastic RSI, and this is what the stochastic RSI looks like. A lot of you guys would have actually seen the stochastic RSI before, but the reason why I use this and the reason why I show you this is the most simple indicator to know when the trend's with you, whether something's overbought or something is oversold. So I'm going to pull that up and show you an example now. And these are the key areas that we need to look at in the stochastic RSI. You've got your 80 level and you've got your 20 level. It's as simple as this, guys. If price action is hovering above the 80, that means that you're in an overbought position. People are buying. The market is getting heated up and we need some form of a pullback. Once you're underneath this 20 level, people have sold, and we're in an oversold level. If you're buying in an oversold level when you're in a bullish trend, then you've got a higher probability of price action being on your side, and then vice versa for a bearish trend. So what we can do is we can zoom out again, because the higher the time frame, The more that you zoom into a chart, or the more that you zoom out from a chart, the higher the probability these stochastics actually respect price action. And what we're going to do is we're going to follow this going back. So this is the Fantom chart. We've got just an example. This is the previous high here. There's the high there. We needed a pullback. We needed a pullback. Stochastics telling us this. Oversold, sorry. Back up, overbought. We're coming back down. Look how simple this is. This can be your friend. It's come back down, indecision, and then as soon as we cross up above the 20, bam, go and test this previous high. What do we need? We need a little bit of a pullback. Bam, you've taken out the high. We can look for higher levels. So use this as your friend, guys. Use it in conjunction with trend lines, whether it's horizontal, whether it's diagonal. Make sure that you zoom out of your chart, go onto the line chart, join the dots, and you'll have a better bias of where price action is likely to move next. More importantly, a protection level, because preservation of capital is the key. Make sure that you know where your stop losses are. Be greedy with your entries. And if you did find this useful, let me know in the comments, and I'll be sure to do more tutorial videos just like this. So take care and goodbye from me.